You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again to view some volatility, as it's time for Volatility Views. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, available pretty much on all of your favorite platforms. So your iTunes, your TuneIns, your Stitchers, also available on your mobile app devices via courtesy of our Options Insider Radio Network mobile app. Of course, you can always just go to the website, stream it there as well. And if you'd like to have your volatility viewing delivered to you live directly into your ear holes, then of course, every Friday, noon Central, 1 p.m. Eastern, you can join us right here on Mixlr. Join the little fun volatility party that is our live VolView stream. Of course, we always post the recording of that live stream as well there on Mixlr. So if you don't want to wait until the podcast comes out the next session, then that's an easy way to get it in between. So we got you covered pretty much any way you want to get it. If you want to get it immediate, we got you covered. If you want to get it in between immediate, let's say you're coming back from work, you didn't have a time to catch the live stream, immediate and the podcast, you can catch it there. And of course, a lot of you can always get it on demand on your platform of choice. However you get it, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom on the volatility space. I know you guys have a few of those. We do like to hear from you guys. And joining me on the old program today, let's spin the old VolViews wheel, mixing things up a little bit and see who we get. Let's start off, first off, somewhere in parts unknown. I guess he'll tell us where he is. We are joined by the greasy meatball, Mr. Mark Sebastian from Carmen Line Capital and OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Good to be here. Good to see everybody. Glad to be in one of the 10 towns that changed America. Beautiful Riverside, Illinois.
Are you seeing me? Did you plant a camera in our studio here again? You're freaking me out with this.
No, what's up?
You said you're seeing us, so I'm just curious how you're seeing us because I'm not seeing you.
I see you metaphysically, not literally.
I see. So you're seeing deep into my soul, which means we've done far too many episodes together. Let's move on then. Let's break out of that and welcome on our guest. He's an old friend of the show. Hasn't been on in a little while, but there's a lot to catch up with him. He is Mike Thompson, one of the portfolio managers over there at Typhon Capital Management. Mike, welcome back to the show, sir.
Yeah, thanks for having us. Appreciate it. Kind of hard to follow Sebastian's, intro there, but glad to be on with you guys.
What can I say? The man looks deeply into my soul, and it's somewhat disconcerting. So let's move on from that instead, right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was, and indeed still is, from volatility, trading, and trending, and all sorts of other practical concerns out here. Again, we're recording this and streaming it live at noon Central, 1 p.m. Eastern on Friday, the 20th of April, for all of you playing along on the home game. And it seemed like it was going to be a nice, gentle, mild sell-off to end the week here, and as the session has progressed, it's turned into a little bit more than that. As we're recording right now here, most of the major indices off 1% or so. S&P and Dow right around those levels. Tech-heavy Nasdaq continuing their tech wreck for some recent sessions, off over 1.5% right now, and all this continued red on the screen means a little bit of green popping in to ye old VIX Cash north of the 17 handle, about 1720 or so right now. So getting a little bit of boost back in the vol space. You know, it's been a fascinating week. We talked about it earlier on some of our programs on the network earlier this week when we saw coming into the week kind of the markets just roaring out of the gate, and volatility, I think to use a technical term, just got whacked, got annihilated. They really came for it across the board, crushed every future, crushed the VIX Cash, crushed all the products. VXX eroded all the live long day, and Contango was back. It was all sorts of interesting stuff. And ever since then, we've kind of been vacillating around that point now, starting to sell off a little bit again. And so we'll see. Perhaps we'll see if we can, how much we give back as this session goes, how much of this week's early rally will be given up. But it has been a fascinating week as we're coming into it here. Our old friend VXX hovering right around 42.5, and our old friend, good old VVIX, aka the volatility of the VIX itself. I know a bit of an obtuse concept, hovering right around 99 or 100, pretty much almost unched, a little bit slightly higher from where we were exactly a week ago. It was right around 97 or 98 about a week ago. So interesting spot we find ourselves in to wrap up the week. I'll give our guest pride of place here. Obviously, Mike, it's been an interesting week. You guys are known for slinging a few VIX futures every now and then over there in Typhon. So what's your week been like? What's your take on this kind of volatility conundrum we find ourselves in? What's been catching your eye from a volatility perspective these days, sir?
Yeah, I think, you sort of hit on it in your intro there. This week's been essentially two environments in 1 week. Like you said, the beginning of the week, and it looked like we were going to have some follow through or continuation on the VIX curve, kind of normalization back to contango, and ever since the April settlement, it seems to be more uncertainty on the VIX side. Combine that with kind of the macro, tech news based on the tariff spat, and all of a sudden it feels like 15 handle on cash seems like last year's 10 handle, meaning, you're maybe in a newer, higher volatility deck, low deck environment. And you've seen all those transitions take place all within this calendar week. So it has been the tale of two different environments all in this week.
So you guys think we set maybe a new floor? We're not going to retest, shall we say, the 9 handle that we touched on last year? You think 15 is kind of a bottoming for the near term, at least?
That's kind of the chatter around. A new higher floor. A 9 on cash seems as distant as summer does to people who live in Chicago. So I think that's kind of the working thesis of most market participants in the vol side, is that the floor is certainly higher. Single-digit cash is, far in the rearview mirror.
I don't know what you're talking about, summer. I mean, it's like 80 degrees and sunny where I am. Is it not that same way where you a couple blocks away? Are you not in this beautiful little pocket of fantastic summer weather we have right here, a couple blocks north?
Yeah. Our rent isn't high enough for that type of weather.
Oh, you didn't get the weather shield? You didn't get the weather shield coming included with your office? Yeah, you're right. It has been an interesting week, weather-wise, but also volatility-wise, in terms of did we test those low? We got to it so fast In fact, Mark and I were joking. I joked with Mark on the last show last week because I was picking around a 17, which actually is looking pretty good right now for the crystal ball. If we can get a little bit more juice in there, we shall see. Got a show or so to go for my prediction to go. But he was actually predicting around a 15. I remember telling him at the time, I was like, I'm not at all unhappy with that pick if that would come to pass. And sure enough, we saw all those 15 come into pass this week. We'll get all to that in a little bit. But first, Mr. Meatball, oh, what a week it has been and continues to be. What's been catching your eye this week, sir?
Yeah, I know we're going to talk about the screwy settlement in a bit, but it seems like that kind of set everything ablaze. Everything was looking normal until this kind of crazy settlement, and then with that, we saw some news out of Taiwan Semiconductor that looked bearish for Apple, and that set the market afoul, and that's where we continue to be. So I gotta say, as this sell-off moves, it certainly does not feel. Each sell-off has had the feel of being lesser than the previous sell-off, and this one feels the same. Like there's no panic, no rush for protection. If anything, people are selling puts into this. So it's. I continue to think that, our theme of kind of cycling, transitioning from kind of the zone 4 now, we're kind of into a zone 3 and transitioning maybe toward kind of zone 2. We might not see but to Mike's point, I do agree that zone 1 is not 9 anymore. Zone 1 is, for those of you that don't know my zones, in Andrew's zone, zone 4 is utter panic. Zone 3 is elevated vol. Zone 2 is, kind of normal vol. And zone 1 is utter complacency. And we're kind of flipping between zone 2 and zone 3 right now. But I agree with Mike. Zone 1 was 9 in 2017. I think it's probably 12 in 2018, because all the realities that we kind of ignored last year, all of a sudden we've decided, hey, let's not ignore reality anymore. It's something that I know I've never done anything other than ignore reality. So the market last year seemed normal to me, but the market apparently has decided that there are some things that are actually worth worrying about.
So, Mike, you guys obviously live and breathe all things VIX futures. It's been an interesting time to be watching the VIX futures. We had, of course, the dramatic events of February, where we saw just that backwardation just come roaring back into the VIX futures. A lot of people were betting that would go away pretty quickly. It kind of persisted for perhaps a bit longer than some wanted and or hoped, but we finally saw the last vestiges of that kind of squeezed out earlier this week. Now, as we're looking at it, it's kind of getting a little flat out there. The cash and front month future, of course, and the second month future right around a little bit north of that 17 handle. So not a lot of heck of anything really going on out there in that front portion of that curve. Not quite backward, not quite contango, kind of just So I'm curious, what has the last month or two been like for you guys? You've been slinging the futures. Are you in a mullet? Are you in a Tulum? What's been the operative position for you guys as we're seeing these evolutions of the VIX futures term structure?
Right. So, the post of February vol-apocalypse, I think, is the working nickname that everyone's using for that. It did take a while for the curve to even think about getting back to normal, and it was sort of a violent path of indecision, if you will, chop back and forth. And I think one of the defining characteristics is just how flat the curve had been post-February, even when the S&P was rallying. And, not until earlier this week did it look like kind of a 2017 type of normal, steepening out curve. And again, now we're right back to flat. So, for us, it's just far more signal switches and trading decisions. And the flatter the curve, the less often we play, because there's, far less edge in structuring a curve trade. So it's been, small fits and starts, essentially, of positions. And with the flat back end of the curve, that does lend itself well to the mullet type of trade. It's just been those trades or those positions haven't necessarily followed through for anything more than multi-days. So a lot of violent indecision.
Yeah, violent indecision. I think that's a good way to term the last month or two out there in VIX land, in terms of the futures at least. So was this a scenario where, like you said, violent indecision? Were you guys? I know you guys are not afraid to sit on your hands if things are not lining up the way you think. Were you guys sitting on the sidelines a little bit yourself as you were kind of watching these structures take place, or were you out there playing? And then B, were you like a lot of the other people out there who were perhaps a little bit surprised at the continued stalwart, dogmatic, resistance of the contango to going away, or was that kind of what you expected?
No, we were certainly surprised by kind of the resistance of the curve to normalize, and things kind of came together for us late last week when we saw VVIX index, drop below 100 and then drop to actually its lowest level since December 1st at one point earlier this week. So things to us looked like they were setting up for the S&P to rally and, volatility to go back to somewhat of a normal state. I think the other kind of eye-opening thing is how disconnected the VIX futures have become from 20-day realized vol. The VIX futures were trading substantially under 20-day realized.
Yeah.
For the majority of March and even for the majority of April. So just substantially disconnected from any kind of relationship there, which just tells us there's more driving the term structure prices than simply the historic vol of the S&P itself. And, looks to us, if you look at it from a macro model, that sort of policy uncertainty is high. So economic policy uncertainty index is high. And that's probably to do, with the unknown of the tariff fight and that kind of thing. So VIX futures have become far less informed on actual S&P realized vol, which is an unusual circumstance. So
is that your gauge of choice? People like different flavors of realized. Some people like 10. Obviously, VIX itself is 30-day implied. Some people like to play around 30. Some people, it sounds like 20. 20 is your gauge of choice these days?
Yeah, we keep track of the term structure of realized vol. So, we have 2-day all the way out to, about 6-month realized. But right in that kind of 10 to 20 day has historically held a pretty strong relationship to the spread that implied trades to realize.
Interesting. Like I said, everyone has their own flavors. I've had people come in here and talk to me about all different types of realized versus implied spreads. But I don't have 20-day come up as often, which is kind of interesting. Mark, let's get back to it because I know this is we were talking about the futures, so it leads naturally into a topic that I know is certainly near and dear to your heart this week, as well as to a lot of people out there who were watching and trading VIX. As we mentioned, things got I think you can call it turbulent going into that settlement period, particularly on Tuesday, of course, where we saw, I don't think anyone. In fact, I joked I think it was on Monday's option block because we were talking. Andrew was bringing up some in hindsight, were certainly very well-timed puts going up out there in VIX land. There were the VIX 16 puts expiring this week. They were trading 100,000 plus of them for a quarter. I remember joking with Andrew, this guy, he buys all these for a quarter. He could buy as many of the 15s as he wanted for a nickel. And we both kind of joked, yeah, the 15s, those probably, not gonna really come into fashion. Oh boy, did they. And did they with the vengeance. I got up to about 55, maybe 60 odd cents towards the end there before going out worthless. So what a week it has been. And I know in particular that settlement was certainly eye-opening to you as well as not to many people out there. So walk us through that period for you, Mark, and what you found so interesting about it.
It was incredible. They were torching volatility all day Friday and all day Tuesday until the very end of the day when it got a little bit of a bid. And then, if you look at the volume, there was hundreds of thousands bought at the 16 strike on Tuesday and hundreds of thousands bought at the 17 strike on Monday, along with the 16 put spread and I think the 15-14 put spread traded. And it's pretty kind of, going in Tuesday night, and Mike, stop me if this sounds crazy, but if anything, I would have expected some screwiness to maybe an excessively low settle, not an excessively high settle. And then what ends up happening, it was just utterly shocking. The settlement indication started at 15.30, then it went to 16, then 16 and a half, then 17, and the next thing you know, the settlement estimate was as high as 18 at one point, and then they ended up settling at 17.26. Then I look at the May AM, and some stuff that I don't know why anyone would want was trading at incredibly high prices relative to kind of where the quote was coming out and where the quote was for the rest of the day and where those will trade for the rest of the cycle. We saw trading of 11,000 of the 1,200 puts, almost 12,000 of the 1250s. There was trading in the 950s, the 900s, the thousands, just some stuff that you wonder why in the world are these trading. And the only reason is if somebody was, the only way it kind of makes sense is, if somebody was trying to change the VIX settlement. And part of me wonders whether it's not one person, but two, and whether, and this was something pointed out to me by somebody that I know in the S&P. They're wondering whether it's two parties selling back and forth to each other at excessively high prices at relatively premium neutral levels, potentially even colluding to make volatility, the VIX, do what it did. And what what really shocks me is with how in the news this kind of crazy settlement stuff has been, and some of this, a borderline scathing article out of a reporter from the Wall Street Journal and Bloomberg and Financial Times, how brazen this appeared to be in the face of what is now a very public issue with VIX settlement. I don't. It is shocking that, if what happened is what happened. So if the truth is the truth, then this was maybe one of the more brazen attempts to basically move the VIX settlement north of $20 million in their favor that I've ever seen.
Yeah, you're right. I was thinking the same thing this week because I saw some of this paper going up. I was like, if this alleged activity is taking place, you'd think of all times, you'd probably dial that back now because there's never been, this stuff has always been talked about, and we talk about it on maybe shows like this every now and then, but we're fairly deep down the rabbit hole. We know that. We're talking to the vol crowd. For the broad public out there, they've never really been aware of this kind of thing or even tangentially aware of its potential to exist. And yet now you're right, with the Journal and a bunch of other outlets, they've been hitting us up like crazy. Everyone's talking about this. So you'd think if you were going to maybe dial back your activities, indeed, if these activities are going on like they're saying, then now would be the time. And yet you're right. This seems like they're still out there. Someone's out there up to some interesting things. I don't know, Mike, was this your takeaway as well? Were you as mystified by this week's kind of settlement and the activity around it?
Yeah, the term carpet bombing the VIX has always been around. And, this was kind of the Moab bomb, if carpet bombing analogy holds.
The Moab VIX settle.
Wow. I like that. The Moab VIX.
I like that.
Agreeing with Sebastian is always fraught with peril, but I totally agree with him that from all indications we had going into Wednesday's settle on Tuesday, we didn't see anything that would have indicated unnecessarily a hot settle. If anything, all our indications were for a mildly softer settle than where the front month future went out. It's hard to see how owning 1,200 S&P puts fits in someone's normal part of their book. Maybe it plugs a hole in their VAR model or something. But it's
brazen. This is
far outside the realms of believability.
Yeah, this is brazen, and I'll tell you, the VIX is a great product, and it does great things, and it has all sorts of use cases. If the SIBO doesn't get this under control, it's going to ruin the product. This is, these guys are trying to do to VIX what the OEX crowd did to OEX. They're trying. I mean, I don't know. Maybe it's the NASDAQ or one of the competing exchanges in engaging this. Because this is so bad.
It's pre-spikes
for SIBO, and I'll tell you, I really think this might be two or more firms that are colluding in this. I think this could end up being kind of a LIBOR type scam, the way it's working out, and it is the SIBO better get on this because and I know they love their high volume players. But if they don't go after this with some vengeance, they are going to be in danger of ruining this product, and that would be really sad for all of us. And but that risk is truly out there because I mean, look, you could make an argument that you combine that with the Apple news, and that is why vol has been screwed up for the last few days. I mean, you could make that argument. This is just like I said, I'm shocked at how brazen this was.
It's interesting.
The Moab, by the way.
Moab is good. I think we have our title for our show there. But you're right. It would make sense. They'd have to have probably at least a couple of parties if this was indeed going on to execute this. Because you remember any sort of esoteric trade. Remember when some guy would come to your pit back in the day and he'd try to line up some crazy boxer on expiration. He'd need somebody else to get it. You need two parties to tango there and be willing to do that. It wouldn't surprise me at all if this was going up, how that would going up. You have to find some other willing dance party, because you're right. In these scenarios, it is kind of hard to look out there, S&P 2670 and seeing 1,200 puts, 900 puts in the S&P going up with any sort of real credibility to what risk manager is going to tap you on the shoulder and be like, oh, hey, you really got to close out this 900 strike. This is looking nasty for us right now. So not a lot of that. I know there's been some talk about, if there's synthetics doing rolls and things like that going into it. I know there was a lot of reporting initially as well with this whole issue, and that there was going to be a special FINRA investigation into this. And I thought I welcomed that. I think everyone did. That's something that should be done. Then I talked to SIBO since then, and it seemed like no, that wasn't the case. That actually is kind of FINRA obviously is already regulating VIX on a regular basis. SIBO outsourced that to them years ago, and so it's just kind of going to be business as usual, which kind of surprised me because you're right. This activity clearly is getting a lot more attention, if for no other reason than just to dispel it. You'd probably want some extra eyeballs on this, and now it seems like that may be changing again. I'm hearing that maybe there probably will be some extra FINRA, just because I think SIBO obviously wants this too. They want a pure product. They don't, like you said, you don't want something out there that could, potentially get rid of the use case for this product. I mean, we've always cautioned for years to avoid trading in and around settlement anyway, just because things get crazy. And, you don't want to have that risk. It's like holding an option through earnings if you don't have to. You don't close it out. Don't deal with that risk. But now that's becoming a much more demonstrable factor, and for reasons outside of perhaps any natural reasons that, VIX should be slinging the way that it was. I don't know. You guys, Matt, you guys are obviously mostly playing in the futures, not so much in the options. Has it become, are you guys fairly active around settlement time, or are you guys kind of like, this is too crazy for our blood, we're getting the heck out of Dodge?
Yeah. We have been active in the past, and just the more variance there is around settlement, the less active everyone becomes when it becomes sort of that unpredictable. If your fair value model for settlement is just not working month after month, then you'll just pull back. And I think that, it probably happens more often when settlements start coming in way off where kind of everyone is thinking. I would add the settlement issue aside, those don't affect necessarily the volatility exchange traded funds and the indexers, because they don't play through settlement, and it is avoidable. If someone loves the VIX and wants to trade it, you don't have to carry anything through settlement and just be off to the next month. by the time Tuesday close of business. So it has a limited effect on the larger ecosystem. It's just a bad press.
It's really bad press. And, that type of, when people think there's cheating in a product, they don't want to be involved with it a lot of times. I mean, that's what happened with the OEX, right? The OEX was a relatively useful product. Some guys decided to play an exercise game with customers, and it ruined the product. All we need is a few big customers to get screwed by this, and you'll start seeing things dissipate. It'll get a bad reception. That's what happened with OEX. It was, the volume dried up.
Are you alleging there was skullduggery with the 1.5, sir?
Oh, it was, 1.5, and then they would do this crazy expert. They would do this. They were American settle, but they would do this weird American exercise thing after hours to customers with puts and calls, and it would it screwed a lot of customers, and they stopped using it. And all you need is a few of these guys getting beat, and they'll say feh. And like I said, SIBO does not want this product getting a reputation for being a Wild West cheater show, and that is what this type of behavior promotes. And I don't know if they released a statement on settlement or not, but that is what this kind of behavior promotes.
Yeah, and I don't think they have yet. They've been kind of notoriously reticent to comment on this. Is one of the reasons, actually, Russell isn't on the show right now. They've kind of dialed back even any sort of live appearances that a lot of their people can make right now as they're going through, I think, an overhaul of a lot of different things that they do over there. And I think a lot of that is part of the reason is because of all this interest in all this stuff going on in and around VIX. So, yeah, you're right. I would like, FINRA to come out and to say, hey, we are officially making a special investigation because it's getting so much interest, and you're right. You hate to see something like this come in here and maybe a couple of firms out here doing some, as you put it, I put it, skullduggery. I like that term. Skullduggery going around out there in and around settlement and have a couple of these bad apples spoil what is otherwise a product that, a lot of people clearly derive a lot of value from, do a lot of trading activity in. As Mike alluded to, this is activity on a handful of days throughout the month. It's not going to impact the lion's share of people who are out there trading this unless you're really holding your stuff to the very last second, and which is something we don't advocate here for most people out there anyway. And for a lot of the big funds out there, they're not really playing in the front portion of the curve, so this is not really gonna really mess with them on a regular basis. So it's not impacting the lion's share of people. But you're right, it is a bad look and surprising. And I think your term brazen is correct, because if this is indeed going on, especially now with so much interest in this subject, then clearly people think that perhaps they can continue to get away with it with reckless abandon, which is surprising. People are more savvy. And I remember talking about this a long time ago, probably close to a decade ago. Henry and Schwartz and I were on a panel at a volatility event in New York, and we were talking. This is early days of VIX options, and the ADV was clearly nowhere near what it is now. And he and I were kind of talking about how there seemed to be some interesting activity in these far, far out of the money puts. And Henry, of course, is the man who comes armed with the data. So he was actually lining up exactly how much money people were spending on puts that were apparently worthless. And this was an odd thing. And it was lining up even back then to a couple $100,000 at least. So it wasn't tens of millions, but it wasn't an insignificant amount of money either. People clearly had some interest in trading these. And this was a long time ago. And it seemed like it kind of faded. Now, of course, it's come back with a gusto, and hopefully we'll see some sort of definitive, statement on this once and for all, so that we can kind of put this behind us. Because you're right, this is kind of polluting the waters of what is an otherwise product that clearly a lot of people like to trade. Mike or Mr. Sebastian, we obviously could talk about this for a lot more. We got other things we got to talk about too. So maybe any last thoughts on this week's settlement before we keep rolling?
Yeah, I like your idea of getting a special prosecutor. What we need is James Comey to leak some memos about that he had with the market makers that are doing this, so that we can get a special investigator on this, because we need it. I like your special counsel idea. I think that's a great idea.
How attractive are the ladies? How attractive are the ladies of the evening for VIX? I would like to know, because that's clearly what's driving all of these investigations these days.
We need a dossier.
Yes, we need the straightforward dossier.
We need a salacious dossier.
Mike, any last thoughts on this, sir? Mr. Thompson there, sir. Any last thoughts on this whole VIX settlement issue?
Did we lose him?
Uh-oh, we might. He was so outraged by the brazenness of the activity that he's speechless. Excuse me. All right, we'll get him back on, listeners. Meanwhile, we'll keep on rolling with all sorts of fun activity. I got a feeling we'll come back to that, maybe even on this show. So stay tuned. But in terms of you talking about the options out there, it has been a fairly active week out there in big VIX land. Today, not so much, doing about 210,000 contracts so far. The ADV right around 950,000 contracts. So still fairly robust, and we did see at least one day this week, actually 2 days, where we kind of threatened that level. Monday hit about 950. Tuesday, of course, where all of this interesting paper was going up, hit about 1.5 million. Wednesday, 518,000. Thursday, 350. So they called a put, for those of you who pay attention to such things, right around 2.6 to 1. So a little bit higher, actually quite a bit higher than it was last week. It was right around 2.2. So for all of you out there who pay attention to such indicators, perhaps catching a little bit of a bid. It's been kind of unched for the better part of the last month, right around extremely low levels, 2.2, 2.3 to 1, which, if you know anything about VIX, is fairly low, perhaps alarmingly so for those of you out there who like to watch that indicator. In terms of what are the big strikes, the big hot things, obviously a lot of stuff came off the board this week, so we're looking out to May, and our number one with a bullet for our top 10 hot VIX strikes. Number one, May 20s with only 217,000. It shows you how light things are right now, and all those options come off the board. Usually our number one is 450, 500, 600,000. This week, a mere 217 gets you the number one spot. Number two, the extremely optimistic May 37 halves. About 204,000 contracts out there. Number three, our first put on the list, the May 17s, 155,000. Seems to have usurped. Usually the 15 strike is the strike du jour. This week it's the 17. Interesting. Number four, for the puts at least. Number four, June, our first June on the list. June 20 calls, 146,000. Number five, the May 21s, 144. Number six, our second and last put on the list. They're not doing it in May, but they're doing it in June. The 15 strikes coming up here, the 140,000 of the June 15 puts. Number seven, the May 22s, about 138,000 contracts. Number eight, the June 15s on the call side this time, 128,000. Number nine, the May 25s, about $122. And rounding our top 10, this is an interesting strike. The June 45 calls, 106,000 contracts open. I'll have to dig into that one a little bit. I have a feeling that's part of a spread, but we'll do a little digging to make sure. About 6.3 million contracts open, right around 4.6 million in the calls, and about 1.7 million in the puts. You know, Mark, we talked a little bit about the funky activity this week. We saw that in the options as well, as we were kind of joking earlier this show and even earlier this week. Things got a little crazy there for a while. There were even the VIX 15 puts, which are at a nickel for the better part of all week and all last week, suddenly just roared back to life with a vengeance. So obviously we talked earlier this week about a bunch of VIX 16 puts that went up, seemingly very well timed in retrospect, buying, I think it was 175,000 for about a quarter. Those certainly turned into much more than that. The 15 puts got up to about 60 cents, so you can do the math and see how high the VIX 16 puts. Was all this kind of blowing your doors off over there at Carmen Line this week as things were just kind of rocking and rolling across the VIX option spectrum this week?
Yeah, we were surprised by how much volume there was in April ahead of this expiration. I mean, it was really busy. And, then what we've really seen for the most part in terms of volume, there is not the same reach for, there is no panic to this sell-off. Most of what I've seen in terms of heavy orders have been strangle sellers, straddle sellers, call sellers. That's been primarily what I've seen. There was a big 15, 17 strangle seller today. Not kind of the, that's what's been really different since we had that Friday sell-off where we sold off about 70 points in a day, and VIX didn't really do much. I know that was from a few weeks ago. Since then, the behavior of the VIX has been not to get bid into a lot of this S&P activity, and the reason why VVIX has been dropping is there is a lot of premium selling in the product right now.
Yeah, it has been fascinating to watch. In fact, today, like we mentioned, a little over 200,000 contracts only going up in VIX options today, when the S&P is off about 1% and most of the other indices are off that, if not more. Then you think, if this was a year ago, certainly we'd probably be doing a lot more paper than that, because shows the factor how the last couple of months have changed our frame of reference for what constitutes a sell-off. When this happens every other day, it starts to get factored in a little bit. But yeah, today's big trade, ironically, is only 14,000 of the May 27 calls going up there for the old 3/8, bringing back some memories of fractions. The old 3/8, which is actually exactly mid-market there for the 27 calls. So got some call buyers, but nowhere near perhaps any size you would think with a near 1% sell-off in the S&P. Let's move on here to our old friend out there. You guys are always asking for VIX ETPs. Our old friend VXX still dominating the charts, doing almost as many contracts as VIX today, doing about 210, and VIX is right around 220 right now, or 212. So they're pretty close, neck and neck. We'll see who comes out on top, even though the ADV for VXX only about 400,000. So one has a slight edge over the other. Mr. Meatball, I'm going to let you just keep your winning streak alive. Let's see if you can do it. Let's see if you can handle this. What would you guess if you had to go out on a limb right now and guess the number one open position in VXX options? What would it be, sir?
It's the 10 puts in 2019.
You are correct. But what's interesting about it? Because every last month or so has kind of been relatively unched. Those 10 puts caught a nice bid this week in terms of, at least volume-wise. They added about 20 to 30,000 more of those this week. So I guess people want 3-cent puts. That's where they're trading. I think they're 3 cents at 5, so somewhere in that realm.
The thing to remember is, as crazy as it is, if vol does go back to that full zone 1, and VIX we really get a kind of a heavy drop in vol, which feels like might be coming. I'm not saying it is, but it might be. Then those could absolutely trade for 50 cents or more by in the 275 days till they expire.
Yeah, I was joking, but it is a fairly cheap lottery ticket play at that. These things were trading 30, 35 cents not too long ago. Now they're literally 3 cents. So it's in terms of cheap flyers on VXX erosion, they don't get much cheaper than that. You're not going to want to get much lower than the 10 strike probably anyway, given the history we've seen out there with VXX and what they do. But yeah, interesting. So people are piling in. That strike has kind of been a little stagnant for the last month or two, and now all of a sudden spring into life. So interesting. We also saw VXX finally break through the 40 handle this week, even though this week, even today at least, it has rallied back. It's above the 40, so around 42. Even though it seems like it's given up some of that spike now, as maybe some of the sell-off maybe attenuating here towards the end of the show. We shall see. Our old friend SVXY, not a heck of a lot going on out there, as we know, because SVXY kind of, shall we say, got its legs chopped off from under it out here, right around 1230, off 1%, but a pale shadow, shall we say, of what it used to be. Checking out some other vol really quick before we get to some of your mail here on the show. There was vol, and it is nice. We talk about all this macro stuff. It is nice. Earnings season is back. It is nice sometimes just to drill down into a single product, see what the implied vol is, see what the straddle is, and compare it to the move and see what people expect. It's a nice, discrete thing you could do in this era where everyone's maybe has a little bit of macro fatigue. Earnings is a bit of a palate cleanser, which is kind of nice. And we saw Netflix kicking it off with a bang earlier this week. Let's see, they closed right around 308 going into their earnings. They're pricing in almost $30, about $28, so right around 9%. They ended up opening up fairly, catching a nice bid. Apparently, Netflix isn't done. Everyone on the planet doesn't have it yet, so that was news to a lot of people apparently, because the stock up about 22 handles as the day went on. It traded up about 30, so that straddle actually pretty well priced in terms of the net move. And right now, it's still right around 330 or so it's given up a little bit of that. So that $28 ended up pretty much meeting what people expected out there in terms of overall volatility. Looking over really quickly at the commodity vol. Again, if you like your commodity vol, stay tuned for about 45 minutes. We'll be back with TWIFO this week in futures options, where we'll talk all things crude, probably some metals, some grains, maybe some indices get in there as well. Of course, some crypto. You guys can't get enough of your crypto vol, so stay tuned for that. But right now, our old friend OIV, which is the crude VIX, hovering right around 26 and change, coming off right about 2.5 points lower than where it was a week ago. Remember, we were talking, hey, is this finally the time when crude vol might catch a bid? And it did. And we actually talked on TWIFO about how maybe this was a time, we don't say it too often, but actually a time maybe you want to sell a little bit of crude vol because it had gotten bid up dramatically. And of course, here it is coming back in a week or so later. These crude vol bids, they can never sustain themselves, at least lately. Same thing with gold vol. Caught a little bit of a bid last week. This week, right back around off the GVZ, which is, of course, the gold VIX, off about 1.25 points. They're right around 12.25 after getting up into like the 14 handle for the first time in a while. So interesting stuff out there. Of course, crypto lighting it up as well. Bitcoin up about 200, 250 handles, depending on which future you're looking at. Doing over there in the SIBO at about 3,000 contracts or so far today. So a little bit of action out there in crypto land as well. All right, we've been gabbing on for a bit. It's time for you guys to join us on the show. It's time for a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. This is the portion of the show where you guys ask questions. Sometimes we turn the tables on you, ask you guys some questions as well. Last week we asked you guys, let's see, where is our, here it is. We asked you last week, which product or segment do you think would experience the most volatility over the coming trading week, aka this week? So through the close today, we gave you 4 choices. So the old VIX, gold, crude, or Bitcoin. You guys picked Bitcoin, and probably not a bad choice. I haven't cranked the numbers out yet, but given how much it's moving of late, it certainly has been quite volatile. Even though VIX has moved, so if you're talking volatility of VIX, that might just how much of the sell-off. That came in number 2 with 28%, 28%, 36% for Bitcoin, 28% for crude. Actually, it was a tie with the S&P and crude, and only 8% for gold. This week, we asked you guys, which has kind of been an evolving question here. VIX, at the time we posted this back at the beginning of the week, was back in the mid-teens. Are you guys buying this vol reprieve, or is this merely the calm before the storm? Quite simply, where do you think VIX is going to end up the week? We gave our listeners a chance to play a little crystal ball along with us. Gave them 4 choices right here, which is where it was at the beginning of the week, between 16 and 18. Higher, 18 to 20. Even higher, 20 to 25. Or lower, 14 to 16. Mr. Meatball, what do you think our audience is voting for right now? I know what your vote's going to be. We're going to get in the crystal ball in a little bit.
I'm thinking they're voting, they voted higher. I think we've got a bunch of paranoid people in our audience.
So 18 to 20 or 20 to
yes.
25? Okay, 18, I'll give you that.
Yes.
And Mr. Mike, we got the Skype gods are smiling upon you once again, sir. What do you think our audience is voting for here, sir?
Yeah, I would agree with Mark again. I think they would be looking for higher vol.
So yeah, we have actually our audience maybe heavily biased towards this earlier week activity. They 41% so far saying lower, 14 to 16, which actually right now is not that far off the mark. We're starting to threaten 16 again as this VIX move perhaps dials it back a little bit. 23% saying right here, 16 to 18, which if we go out here, that's pretty much where we'll win. 18% saying higher, 18 to 20, and 18% also saying way higher, even higher, 20 to 25. So I don't think that one's going to come to pass. Spoiler alert here. All right, here. Let's see. I think we can hold off on the exchanges. People commented on the new exchange by MyX. People actually surprisingly pro more exchanges, which surprises me. Others saying they get good fills. Patrick's note saying, the more the merrier my fills are. So he's getting good fills. He's happy. He doesn't care that there are more exchanges coming in. A lot of people asking about this one, too. Scott and a bunch of others. Of course, MyX, they had a lot of news coming out the last week or so, not just on the new exchange front. They're also bringing back spikes, Mr. Meatball. How crazy is that? So we saw, of course, Bats trying this, which is, of course, effectively a VIX on SPY. Bats, of course, becoming part of SIBO. That product kind of went away. Now we're seeing MyX tilting at that windmill again. This time they're actually calling it spikes, though, not SPY 9 like it was before with Bats. So, excuse me. Scott Somer, a bunch of other people asking the same question. Do you think this product is going to have legs? Will it get enough liquidity? I don't know, Mr. Meatball. We didn't really see enough of it the first time to know. Do you think there is some legs for a kind of implied vol product on the SPY?
History says no. The only way they would possibly be able to make this work is if they were smart enough to make the contract the same size as the future, and then they might be. So if a contract was for 1,000 Vega instead of 100 Vega, you might have something interesting there with spikes. But if all you're doing is introducing another VIX, no one's going to care. No one's going to trade it. And it adds no value. I mean, we've seen all these products come out trying to go after it, and they all fail. So I think that you're going to be I think they will be sorely disappointed. And on top of that, it trades at the MyX lax, which nobody serious is going to want to execute on.
I don't know. We'll see. We're going to have Shelly Brown from MyX is coming on in a couple of weeks to tell us why this is the best things in sliced bread.
Which show? On this one?
On this show. So it should be.
All right. Can I call it MyX lax?
You can call it whatever you want. It should make for an interesting program. Shall we say, when his lawyers contact you after the program. All right, Mike, same question for you, sir. You know, obviously we've seen a lot this tilting at the VIX windmill with a bunch of different products. This literal product has been tried before, but it kind of got taken off the board before it had a chance to really succeed or fail. But we've seen so many different permutations of people trying to kind of capture lightning in a bottle again in the VIX space. You think this one has any legs to it, Mike?
Yeah, it doesn't look good. Just from a historical perspective. Without reading the specs on it and how it's going to trade and that kind of thing, basically the accessibility to it, it's hard to see it having meaningful traction. But I've been wrong a few times before, and if there's any time to try it in terms of competitive product to VIX, maybe now is the time.
Yeah, how did Eurex do with their bond futures?
I don't want the sound of one hand clapping.
When there's what's exactly? If a product trades on the MyX, does it actually trade?
There you go. I can see those lawyers dialing up their briefs for you as we speak, Mr. Meatball. I got more stuff here. Mr. Niddles, I like this handle, saying VIX settlement, WTF. Well, I think we kind of touched on that already for the better part of the first half of the show. But he's kind of in the same camp as you, Mr. Meatball, that there was you and Mr. Niddles together again. That he thought it was kind of crazy this week. Yes, I think as we've covered it, it was the Moab of carpet bombs this week. Alan, here's a question actually well-timed for you guys, Mike, and your brother out there. He wants to know, what are the VIX mullet guys up to these days? Well, Mike, what are you up to right now? Besides talking to us, of course.
Yeah. Well, spending my time talking to you fine gentlemen is the best use of our time. We're up to the same stuff since I think last time I saw you, Mark, long ago, was down at the SIBO Risk Management Conference, so we caught up there. But it's really the same grind. Just trying to make money, raise assets. It's always sort of the same treadmill for us. So it's been an interesting few months, to say the least. And that's it's really kind of the the same grind every day.
What are you guys? I think probably what everyone wants to know out there is: are there any new well-named strategies to accompany the mullet and Tulum that you've added to your arsenal since the last time you came on the show?
We do not have any new killer code names.
Is there like a high top or a fade, or what other haircut style name strategies do you have?
High top,
right,
buzz cut.
Yeah, you'll be the first to know when we do come up with something catchy.
I got it. The Mohawk, for when there's like a bid right in the middle of the term structure. Bam, Mohawk. There you go. See, I'm doing your marketing for you already. My invoice will be in the mail forthwith. The VIX Mohawk strategy. I like it. For all those moments when that's relevant. All right, let's see. We got a few more here we can squeeze in. The comment from F. Contango Trader. He writes in many times a day. He wrote in here, next 2 to 3 weeks are critical for earnings season. The speed of the upside move over 1% keeps real vol high. Also, we have to see if we can reach new 52-week highs. If we get a 0.5% movements in a couple of days, and we could talk VIX low teens, healthy contango, VXX low 30s. He's writing in, I think, to we were talking before about what's up with contango, when's contango going to come back. That's his recipe for what he thinks it will take. What it will take to get a nice healthy contango, as he puts it, back in the marketplace. 0.5% movements, a couple of days, healthy contango, and VXX back in the low 30s. Since we're talking other products, let's do this one really quick from Ned Brown at Essox Golf, his handle is here, asking, I had heard the NASDAQ was thinking about bringing out a volatility index based on their products. Excuse me, did they ever do it? Yeah, you know what happened there, Ned? ISC was the one who was talking. We had them on the show years ago, Scott Nations, and kind of their Voldex product, which was effectively VIX without the skew. It was kind of like old VIX in many ways. That's what they were talking about. ISC partnered with them to list that. Then ISC, of course, got acquired by NASDAQ a few years ago. So that's kind of probably what you're thinking of. To my mind, I don't know of any others, at least off the top of my head, that are kind of along these lines. That one, I think, has kind of gotten a little bit new lease on life of late, but I haven't had a chance to check in with them lately. Maybe we'll have to check in with those guys and bring them back on the show and see, hey, what's up with Voldex and SkewDex? Because they were intriguing, and clearly there's an audience out there who wants VIX sans skew. Maybe our conversation from earlier in the show maybe drove a lot of people to want that as well. I don't know. But either way, it's interesting. I don't know, Mark or Mike, have you guys heard any updates on the old SkewDex, Voldex products?
I know it's out there. I don't know what they're actually doing. There's a reason why they changed. The VIX calculation used to be a lot more like that. And the reason why they changed it is because the street wanted skew involved so that it would better hedge a variance swap. So by taking out by what they're basically doing is kind of, if I need Voldex, I'll buy a straddle. It is kind of what the feeling I get.
Yeah, that's kind of the one thing I hope doesn't happen as a result of all this kind of stuff we were talking about before the settlement. I hope they don't go back to stripping out the skew, because I think the skew provides very meaningful information, like you mentioned, for the OTC variance. There's a lot going on there. It's not just at the money volatility all the time. So I hope that's not the knee-jerk reaction to all this talk of manipulations. Oh, let's just get rid of all that, because there's value there. It has to just be handled correctly. Hopefully that's not where we go. But that said, some people maybe want that Voldex. I want to bring those guys back on and reach out to them. I think the problem they ran into, as I remember correctly, was they needed an underlying. People really wouldn't trade without an underlying. So then it was a problem. Would it be a future or an ETF? And then I think ISE obviously didn't have a futures exchange. Now NASDAQ does. So maybe there is a second chance at life for these. Got a lot more questions. Unfortunately, we're running up against it, listeners. We got to keep on rolling into our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the most difficult, the most challenging, the most embarrassing part of the old show. Now, I was looking good when the show started. We were north of 17, right around 17, 20 or so. So it seemed like my 17 double prediction was in the bag. And then sure enough, the rest of the show goes by. The sell-off kind of tempers a bit, and we lose about a handle in the VIX Cash. So now right around 16, 30. So we're pretty much almost split right in between where we predicted last week, Mark. You were 15, so you're about a 1.35 off. I'm technically closer. I'm 1.2 handles away at 17 double there. But it's not a victory I'm going to celebrate. It was much closer. We just due to crystal ball at the top of the show, then I would have been. That's why I have to change the format of the show maybe for next week. So that said, let's call it a tie for me and you, which means we'll let our guest have pride of place to embarrass himself first in terms of where he thinks VIX Cash. So Mike, that comes to you then. You get to play the Russell role this week. And where do you think VIX Cash will be at this time next week, aka the end of the show?
If I'm playing the Russell role, I need my purple glasses first.
Yeah, and then you need to buy like VIX 30 or something crazy because that's all he always does.
Right. And on your show, doesn't the tie always go to the host?
Yes, it does. Even though technically
everything goes to the host on his show.
Technically, it wasn't a tie. I technically won, but I'm not going to trumpet that one. It was closer like an hour ago. Let's just say it that way.
Gotcha. Now, I think so. Next week is probably the busiest week for S&P earnings. Generally, that's VIX kind of negative. The dispersion trade kind of kicks in as there's some certainty as earnings are released. So I'm going to go with 1585.
Interesting. 1585, so about a half a handle lower than where we are right now. And you're right, there is, it's kind of a bit of a counterintuitive effect. A lot of people think that earnings is going to jazz up, drive a little bit of vol, but actually usually the impact is actually the opposite. So that could certainly be the case. I guess if we're going in order, I guess I probably should go next here. Let's see. I was at 17 double last week. We're right around 1635 right now. It's about 1 1/4 handles below that. I wouldn't be happy. I wouldn't be upset with your pick. I wouldn't be upset if we had a repeat of earlier this week where we got back down to the 15 handle again. That certainly wouldn't be the worst thing. I'm going to say, let's see. I'm going to say, I'm not that. I don't know if we're going to have too much of a sell-off. I'm going to. This is rare that I do this. I'm going to say we're going to pretty much be right here where we are about a week from now. So about 1635. Mr. Meatball, what say you, sir?
I'll tell you, with the complete lack of VIX caring about any of the sell-off the last couple of days. We're off. We're below we're kind of right at the 50-day moving average. We've given away, 40 points from the top, and VIX is essentially unched from its Tuesday close. Or maybe a little bit higher, but I'm telling you, I think we're cycling out of higher vol. I'm going to go crazy. I'm going to say 14 1/4.
Wow, 14 1/4. I thought your last week pick was a wee bit aggressive. 14 1/4. Again, this is the case of like this week where I would not be not happy if your prediction came to pass intra-week and then we settled out where I am here. That'd be not a bad scenario. It was looking that way for about a few minutes of the show this week. Then it ended up VIX, as always, has a mind of its own. But again, all that flirting with the 15 handle this week wasn't the worst thing in the world, as crazy as it was. All right, listeners, that music means we come to the end of our epic journey through the world of volatility. We stayed a little late, but hey, all sorts of fun to talk about this week. I'm sure you guys have questions, comments. Hit us up. You know where to find us. If you like all this talk of volatility, you want a little bit more in your ear holes directly, talking about some commodity volatility, skew, unusual activity, open interest changes, volume, all that stuff out there in the crude, energy, metals, crypto, ags, all that fun stuff, indices. Stay tuned for TWIFO in about 25 minutes. Right back here on the same feed for Mixler. You can get that, so that should be fun. But before we go back around the horn. Let's start with our guest, who had a lot of fun on the show, hopefully, today. And we'll have to bring him back on again soon to talk about his forthcoming VIX Mohawk strategy. There it is. But that said, what's coming down the pike from you guys over there at Typhon, Mr. Thompson?
You can find out more about what we do at typhoncap.com. And we're going to be sort of very curious to see if Sebastian's prediction for next week VIX comes true. That'll be our main focus for the next week.
Yes, there we go. Speaking of crypto, you guys are starting to sling some crypto over there at Typhon, are you not?
Yes, sir. So the Typhon has a crypto fund, We just did a crypto panel in New York on Wednesday. So very interesting space, always a lot of attendance. And especially given the volatility in those cryptos recently, it's really, the space is extremely hot in terms of people watching and looking. So it's a fascinating space, and there's a million different opinions out there on it.
Yeah, I can't wait for crypto options. I'll tell you that much.
That will be huge, and we'll certainly talk about them on this show and many other shows on our network, perhaps even a dedicated show when all that stuff comes to pass. Mr. Meatball, same question for you, sir. If folks are intrigued by all this VIX talk, maybe they want to take a webinar to learn more, perhaps they maybe want a fund to help them navigate these turbulent volatility waters, where should they go? What should they do?
Yeah, well, if you're, what I would say is if you're looking for the experts on contango and that kind of trading, go see my friends at Typhon. If you're interested in a smarter way to be long the S&P 500 in a really cool way with a hedge, then come and see me at Carmen Line Capital. Our broad cap hedge fund is in the middle of its raise right now, and we'd love to have you as a investor if you are a accredited investor, obviously.
There you go, Carmen Line Capital. If you want to learn more about all this fun VIX stuff, maybe even VXX. You want to take a webinar on VXX, they got it over there at optionpit.com. Check it out for yourself. And on behalf of Mike and the other Mark, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing. If you like this kind of stuff in your ear hole, stay tuned. About 23 minutes, maybe we'll pipe a little bit of fun option block action to keep you guys satiated. We'll be back here in about 20-odd minutes, talking a lot more vol and skew and all the other fun stuff on TWIFO. Other than that, we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.